Hello, everyone. This is JJ with our weekend update for the 1st of March, Sunday. And as you all know, we've had some interesting developments in the Middle East. Therefore, everyone is looking for a gap down on the Globex Open at 6 o'clock Eastern Time. Let's go take a look and see about some levels if that happens. And of course, a lot of times we do gap down, collect all the liquidating inventory, and then go back up to sell it. So let's see, you know, um, in situations like this, always just really trust the chart if you're unsure. If the market opens and just, gaps down and just keeps going looking for a bid, let the large traders and the wholesalers and the market makers, let them find that support level. That's where the big shorts will come covering. When they do, they will start bidding the market. It'll go sideways now. If the news cycle starts getting more accelerated at night, look for larger moves. If it's quiet, it might just sell off, gap down, and then go sideways while we rebuild a little bit of cost basis. Let's go take a look at some levels here. So here we have our first swing low at 67.49. And if that goes, then everything from December above will be in play, right? And that's you're looking for a move like that because these are swing longs, and you could see that there was a seller up here over 70.14. But every time we get under 68.07, bid, look below and fail, fail to look below and fail. So it's been around, it's going back and forth here. And the speculators have been making beautiful money. All you have to do is wait until it gets over 68.10, buy it, put your stop under 68.07, sell a little in the middle and sell some at 69.90, right? And then when it looks above 69.90 and comes back in, boom. I mean, if you want to make big money and you're looking for large size trades, find a nice distribution balance area like that and trade from the outside in. Your risk is very, very minimal compared to your reward. And you can tell whether the trade's going well or not by the state of your orders. When you're short, you put some buy orders in. If those buy orders don't get filled, well, then there's not enough supply and you're going to have to increase the price of your bids. Anyway, let's get back to that swing low of 67.49. Then we have another one here at 66.85. Um, quick look for the old NQ. Everybody's always asking me to do levels for NQ. So I'm thinking NQ 24,164. There is a swing low here and here. So if we take that low out, all of this candy is going to start falling out, and the next level will be 23,533. Underneath that, of course, 22,488. You can see there's little areas of cost basis. There was a cost basis here. We went into distribution. Look how it gets right to the top of that cost basis. Distributes, comes right back to that level, right? So once you find a cost basis, it's not easy, but it's very nice because you can see whether that liquidation, because if it broke that level of 24,164, took out 23,533, then all of this is going to fall out. Whereas you shake all these people out, right back up, boom, the levels are working great. So there's your NQ for you NQ traders out there. Okay. And let me see. So that's the candle wax on the dailies. Let's go take a look at inventory. Okay. You can't be a trader and not understand the concept of inventory, right? Because every trader in every other market has an inventory, whether you're selling rice or beans or coffee or uh, fake Rolexes, whatever your product is. Here it's ES contracts, right? So there's your inventory. Look at all that inventory from November till now, 67.73. That is what I call our pinata low. If we take that, then we'll be back into this area here that we were in sort of mid-November. That is a lot of inventory. And it's just been going back and forth between this 67.73 and 70.40 on the top. You could probably cut that down here to 7,000 and just a big. But what I want you to see is the position, right? So if we do get a distribution, 6,600, right? Big level on the downside. Alrighty, so we have that. We have that. Now let's go take a look at the 4-hour candle wax. I'm doing this a little differently than I usually do because circumstances are a little different. So we need to kind of get a bird's eye view from the top, and then kind of have the bird circle a little lower, and then like we're like vultures. We're just flying lazy circles. And then we drop down and we see our prey, right? That's what we're doing, right? So now we're going to a 4-hour candle wax. What I've done is for you anchored VWAP vultures, I've anchored the VWAP from this candle here on a 4-hour back in November into that December and end of year distribution. Here's our balance zone, 68.29 to 68.86. Middle of it is around 68.60. Okay, this is the 2 times profit, 2 times discount. If we get a really big gap down, that's 67.14. And then there's that 6,600 area again, that we spoke about. So there's some levels for you to look at. These 4-hour charts are really nice for traders who are swinging a longer time frame. Like the look above and fail on a 4-hour is a nice trade. The fail to look below. So here, when the market came down to 68.29, we could have been buying 68.30.40, using 29 as our exit, selling into the 68.60s, and then ending the trade into the 68.75 80s. That's a nice trade, That's a nice 4-hour trade. And you can look inside the 4-hour candle using 15-minute or whatever you like to see the order flow at that time. So those are what that we really like common sense trading at Trading Syndicate. The trades have to make sense. They have to make business sense. If they make business sense, great. And our stop is placed where the trades stop making business sense, right? So if you own inventory here, right, it's really simple, right? If you're an owner of inventory, meaning you're long at 68.40, and somebody puts it on sale under 28, the inventory that you own is mispriced and you must get rid of it before sellers who own it at lower prices or sellers who are forced to sell at lower prices undercut your offer. And then you're holding, if these were bananas, you're holding bananas that are going bad. Well, everybody's taking their bananas and turning them to cash. Remember, you're a trader, you're not an investor. Okay. Simple common sense trades, right? If you're short, right? If you do a look above and fail short, you understand that there's a seller here under 7,000, right? So you initiate, you put your stop just above 7,000, and then you put some buy orders here down at 69.70, 69.80, and see if you catch any product. If you do, then you can, leave your lower buy orders in. But if, say, it goes like this, you can at least cover and pay yourself, right? And then using that VWAP from the bottom of the move, you guys can see the accumulation under VWAP, distribution above it, right? So everything's common sense, practical, simple. Why does it have to be simple? Why not look at 20 things and be really complex? Well, because when they apply pressure to you, are you going to become a diamond or are you going to fold like a house of cards? Most traders who haven't been trained and who don't understand the business go and get these really complex business plans. And when the pressure hits, when those trades start going wrong, because they do, you guys freeze and you don't know what to do. Hey, everyone's done it. I've done it. We've all done it, right? Nobody pops out of the womb and knows how to do this stuff automatically, right? It's a learned business. So come into our room at Trading Syndicate. Syndicate will teach you how to trade intelligently using common sense, right? We don't use big fancy verbiage, right? Very simple, right? And okay, just in case nothing happens, right? Maybe just everybody goes kumbaya and hey, stranger things have happened, right? Maybe we don't gap down. right? Always prepared for an upper scenario just in case, right? Every time people put a plan together, the market kind of laughs at us, right? So it's always good, just in case, to know, where they put the cookies at the end of the day. They're right here, or the donuts, right? So 76 to 82, that's where all the cost basis is for Friday, okay? And I'll just put in the upper stops here, just in case, 82, 68.90, Friday's high. This is the overnight. Let me get rid of it. Oops, sorry. All right, so there's the overnight of Thursday. There's Thursday, Friday. So these would be our upper stops, all the way up to 69.28, 69.40, right in that high. And there's a point of control up there. There's some inventory. So, everybody's saying gap down, right? But just in case, what if it doesn't? What if it doesn't? Anyway, folks, that's it for me. If things are really crazy by Globex, I might do a Globex session on YouTube. I will let you know if I do. I will announce it on X. I'm JJ. I'm VWAP Trader 1 on X. This is tradingsyndicate.org. We are we're the cheapest trading room out there. Where you're actually going to learn how to make money. We're $20 a month. It's actually 19. Come for a month, and I promise you'll learn more in a month from me than you will in 10 years. And it'll be common sense, practical, no gobbledygook, no, no double talk. This is where you take the trade. Why? This is where you put your stop. Why? And this is where you should put your exit orders and why. And what happens if those exit orders don't get taken? How we use our orders to tell us what's going on in a market, order flow wise. Our orders are the best order flow software. It's actual transactions. Okay. Thanks, everyone. Have a wonderful weekend. Our friends, in those places, we have a lot of them on our YouTubes and stuff. I hope you and your families are safe, and hope everything starts to calm down and cooler heads prevail. Thanks, everyone. Have a wonderful weekend and be safe out there, folks. Much love. Bye for now.